What's up guys, and welcome back to Wall Street Millennial. On this channel, we cover everything related to stocks and investing. 2022 has been a brutal year for most investors, especially everyday retail investors like you and me. And the last few months have been especially bad. On Wednesday, November 2nd, the Fed hiked interest rates again, its fourth 75 basis point rate hike in a row. To put that into perspective, the last time that the Fed hiked rates 75 basis points was almost 30 years ago, and this year they've done it 4 times in a row. And these repeated interest rate hikes have been devastating for stock prices for at least 2 reasons. Because higher interest rates means higher borrowing costs for companies, thus reducing their profits, and because higher bond yields means that for investors, bonds are now a more competitive alternative to stocks than they were before. Tech companies have been hit especially hard, with the tech-heavy Nasdaq currently having lost more than a third of its value. Many individual stocks, like the ones many regular investors like you and me invest in, have done much worse. In this video, we're going to take a look at some of the biggest losses posted on the Wall Street Bets forum, so we can all feel a little less alone. We'll even see some people who've managed to make gains, so we can have hope that things might get better. But before we get into it, remember that you can always catch us anytime by subscribing to Wall Street Millennial in podcast format on both Apple Podcasts and Spotify. Just click the link in the description below. First up, we have a jaw-dropping loss from Robinhood trader D-Dub. This trader was all in on all the wrong stocks this year. Specifically, he was long stocks like AMD, FuboTV, and Roku. His single biggest loser was FuboTV. FuboTV is a streaming service that provides things like live sports and some other channels. At the beginning of the pandemic, its stock skyrocketed because revenue and user growth were just starting to explode. And while the growth was and still is impressive, the problem is that their costs have increased in lockstep with revenue. In fact, over the last 3 years, their total costs have increased much faster than revenue, and they're now losing over $100 million every quarter. The result has been devastation for anyone unlucky enough to have bought into the hype back in 2020. In the past year alone, the stock has lost 9/10 of its value, and this trader has lost over $43,000 on this position alone. The trajectory of his total portfolio value closely matches the stock price of FuboTV, but that's not the only stock contributing to his $130,000 loss. He was also invested in AMD. All the chip stocks, particularly AMD and Nvidia, skyrocketed at the beginning of the pandemic when crypto and gaming demand for processors far outstripped supply. But now crypto has crashed, and gamers already have their new PCs, and stocks like AMD are crashing. Add on Roku, which similar to FuboTV is struggling with the viability of its money-losing business, and our poor friend is down over $130,000. That's 91% of his portfolio. As one commenter says, the OP has lost so much money that the 1-year graph of his account value has now flatlined. Better luck next time. Next up, we have another near total loss, this time by user TDKing3523. This trader also lost over $100,000, $107,000 to be exact. And his losses were a straight line down over the past year, from many of the same stocks as the previous trader. He has now been relegated to YOLOing his last $20,000 left. Some commenters say that the money he still has left is still more than they do, and there's still hope. But another commenter says to make sure they're ready to go to Wendy's for a job in case it doesn't work out and they lose everything. The OP says that since making his enormous losses, he has now been selling covered calls in order to avoid getting margin called. Selling covered calls allows you to benefit from the theta decay of options, generating a small amount of predictable income every day. However, it also comes with a risk, because you still participate in the downside if the stock goes down, and you don't participate in the upside if the stock goes up. This just goes to show that there's no easy way to game the market. You may think you have a clever strategy that can get you out of a hole, but it's never as easy as you think. Now let's take a break and examine a case where someone bucked the trend and was able to actually make a small fortune over the course of this year. User Unknown Fishball was able to make consistent gains over the last year, increasing his portfolio value from about $10,000 up 6,000% to over $600,000. How was he able to do it? He gave a hint in the comments: snow but inverted. Snowflake is one of the high-flying, high-multiple tech stocks that skyrocketed at the beginning of COVID, but over the past year it has been demolished. It is now down 2/3 of its value since the beginning of the year, and the losses have been relatively consistent. The OP could easily have either shorted the stock throughout the year, or to get more leverage, bought puts on the stock to accelerate his gains. Either way, it worked out tremendously for him. One commenter gives a little word of advice for the OP. He says that if he made that much money in 1 year, he would cash out the majority of it and give it to someone else to manage for him. Then, using the investment income of about $40,000 to $50,000 per year, live modestly but carefree for the rest of his life. It's not a bad strategy that, given the number of likes on that comment, it seems that many other people would agree with. The alternative is laid out by another commenter who says that he was up over $670,000 once after YOLOing a $25,000 initial investment, but he then lost it all except for $462.36. It highlights the fact that you have to have taken risks to make such huge returns, and those same risks could easily take back all that you made. Next up, we have a trader who has been on a wild ride over the past several months, YOLOing into 0 days till expiry options. His overall P&L isn't bad, just extremely volatile. He's had multiple days where he was up or down nearly $100,000 in a single day. At the peak, he exceeded the 200K mark, only to suffer steep losses in the last month. Most recently, he lost $35,000 in 1 day to bring his current account value to $65,000. He did this by buying call or put options on the SPX S&P 500 index at market open on the day of expiry and holding for less than 1 hour. He would use a disciplined strategy of selling whenever he incurred a loss of at least 40%. He would sell a winning trade as soon as it doubled. But the top comment wasn't even interested at all in the portfolio gains or losses or the positions. Instead, they were interested in the shape of the portfolio value over time. The most recent surge and pullback makes an almost perfect silhouette of Batman. Wall Street Bets posts are usually fleeting, but this one may go down in the history books as the Dark Knight YOLOer. Finally, let's finish up with trader Jay Chen, who has now lost so much money that he thinks it may finally be time to leave the casino for real. The last year hasn't been great at any time for him, but in the last couple months, things got really bad. He is now down over $200,000, the majority of it since August. Although he didn't say what trades put him in this spot, it seems like he is now considering making one last YOLO to make back all of those losses. The shape of his portfolio value is so emblematic of a degenerate gambler that someone even asked to purchase that image from him. In a comment that's difficult to discern whether or not it's a joke, someone who claims to work with Getty Images asks the OP to sell them a screenshot of their account value as an image that reflects a slippery slope. To that proposal, the OP just replies with a picture of the GigaChad meme. Alright guys, that wraps it up for this video. Do you have any big gains or losses to share? Let us know in the comments section below. In the meantime, don't forget to subscribe to Wall Street Millennial in podcast form on Spotify or Apple Podcasts. Just click the link in the description below. In the meantime, thank you so much for watching and we'll see you in the next video. Wall Street Millennial, signing out.